You scared the crap out of me.
Yes. This
Okay,
is
so now that,
official.
that everybody else can hear me, are there any like general questions regarding seller finance?
I think that's what they're here for, Josh.
Beautiful. Okay, just
Yeah.
just making sure because I know Brony and Tracy and I are already working
I,
together on getting their deal and everything. So,
I have a question.
Mhm.
Like how in my mind, like how can you talk with somebody? How do you convince a seller to do a seller financing? Like what do you like that's the thing that because I know you master on that. So I want to see what your
I
trick.
appreciate that. So yeah, it's I actually convince them by telling them I'm not trying to convince them. So I'll literally get people that will say, "Oh, well, let me see if I can convince them to do that." And I'll say, "I don't even want to convince them to do that. All I do is propose the value proposition, and if they want to do it, great. It's to their benefit. If they don't, also great. There's a bunch of people who do understand the structure and would love to maximize their asset and make 75 to $100,000 more over the length of time." And I'll literally just be kind of blatantly honest. I can't stand when people try to convince me to do things. It's super annoying. You know, there's people at the mall that are like trying to get you, hey, check this out, check it. I do not want to be that guy at all. So I'm just like, hey, these are the numbers, these are the facts. And I think last Friday, maybe 2 Fridays ago, I spoke at Berkshire Hathaway, and there was one. It was maybe a couple dozen agents, and one of them was really adamant about, well, why would anybody do this? And she kept like bringing up this, and that. So you're not finishing the math, and that's really what it comes down to. Is sometimes, oh, well, what, 2%? Why would anybody do that when they can put the money here or make 5% or whatever? And it's like you're not finishing the math. That's all you have to do is finish the math. And most of the times, I'll do a lot of it for them, and it's vague because everyone's situation is different. But for the most part, I just present the value proposition. If they have questions or concerns, I try to address those and beat those objections before they can even send them to me. So I think I've shared my email template with Pat. I'm pretty sure Roni and Tracy have seen it, where my email post phone call is pretty much copy and paste. I'll add a little bit of rapport in there, but then it'll be like, oh, here's the terms, here's this, here's what people have worked, here's a few properties that were, and the properties are always, I'll hyperlink a few deals. Those properties are always more expensive than the subject property, nicer than the subject property. Most of the times they're fully renovated. So they can't be like, oh, well, I get why someone would do this with a fixer upper, or I get why somebody would do this in a not so nice area. And it's like, nope, this one's in East Cobb, Walton School District. This one was fully renovated. This one was almost over $500,000. And I've done this one at $980,000. So there's no objections that they can kind of bring up that actually might make some sense.
So, Josh, what you're saying is that it's when you present it to them, you're giving them a map that they would not normally see, right? And I'm
Mhm.
going to speak from the side of a wholesaler, right? So I know one thing that we say from a wholesaling standpoint, and then one thing we train from our team is the fact that you cannot say the wrong things to the right people. Okay.
Mm.
You can say the wrong things to the wrong people, but you cannot say the wrong things to that person. So if you're saying the wrong things, sometimes, and not all the time, right? Maybe it's how we present it, but sometimes you cannot. It's the wrong person. You know, if you're starting to feel like you're tripping to trying to convince the person how that this is good for them, then possibly it is the wrong person. Because we work a lot from a wholesaling standpoint
Mhm.
on that sales and the mindset side of it. Say, you know what? Sometimes it's a matter of just it's a matter of numbers. It's a matter of just moving on. But in
Exactly.
terms of numbers, you're presenting those numbers to them and saying this is what it is. So you're not convincing them. You just basically on and again going back to the wholesaling side, you're solving what do you call it? You're solving a problem. Like you're not working on selling them. You're not working on even selling
Exactly.
them there, but you're
Exactly.
solving them a problem. Is that
Mhm.
correct? Is that kind of how?
Percent correct.
Yeah.
It's just a value proposition presentation if they decide this route, and I'll kind of address certain things like, hey, if in the if you guys in the email follow up, right, it'll be like, this is the one that I've sent you where you're like, you should be charging for this. That email template, it literally will be like, hey, if you want to avoid laggy, picky, fearful buyers, no more seller credits, because that's what everybody's doing right now in this market. Like everyone knows it. So any agent's going to even read that and be like, oh, damn, well, that's true. We did just go under contract and we fell out, or they wanted these silly ass credits that didn't really make any sense. Whatever the case may be, they've already gone through that. How do I know that? Because we do deals in this market. So we know what people are going through.
Yes.
And I'm also talking to all these agents. So they tell me all of these things. So it's not theoretical. It's purely factual. So if it works for their seller, it works for their seller. Excuse me. And it's something that has proven to be super valuable. Like I just got a call back yesterday from one of the agents that was at the Berkshire Hathaway thing that was like, hey, I think I have 2 deals coming up that'll work for that. Those are now pocket listings. And that's kind of the goal with the lead gen when it comes to that.
Can we, Josh, can we go over like an intro of it? Can we? I know we sent that. I sent you that list. I don't know. Are we going to stick with that format?
We absolutely can. Yeah. I mean, the basics of it are essentially you want to go after.
But no, but before we go there, let's go over an intro, right? So let's just say in this workshop. So someone brand new, someone's coming in. What is the tell the public, people that are not in the industry, what is seller finance? Let's talk about the intro.
So traditionally, to buy a house, hey, I'm Pat, I want to buy a house. I'm going to go to the bank, have my great credit, make my income, make sure I have all these years of proof of income, bank statements, etc. Bank's going to approve me. I wait in a certain amount of time. I go buy it, whatever I'm approved for. Or you can go and find homes with free software that exists that are owned free and clear, which means they don't have any debt. They're only paying property taxes. You can go to that person, create a mortgage with that person, not needing a bank at all, and do the deal buyer to seller. No credit, no nothing. I've never been asked for anything. One time I did on a recent deal in Roswell that I was working on with Ronnie and Tracy, and that was it. And they were just weirdo people. Like you come across weird people, and it's interesting. Like we came across this person in Lawrenceville, weird lady, like super weird energy. It was like, well, what if you remove my first position lien? I was like, how do you do that? Interesting. So you'll run across interesting people, but for the most part, it's I believe, and could be weirdo about it, we've been indoctrinated to believe we need banks to purchase these homes, and you just don't. Right?
That's
we
correct.
can go peer to peer, belly to belly, and do it together.
That's correct. Josh, I saw a post yesterday, right? So I saw a post yesterday. I'm in the Black owners. It's called Black owners business owner, right?
Oh, I saw the repost.
Yeah. So and then I saw another guy post, right? So but in the post, it's amazing because someone who is in real estate like myself, and I'll tell you the side story to that. But the point on this post is it says the new millionaires are the service workers, right?
Yep.
And as we are in real estate and in a small business, it's so true that people don't realize that your HVAC guys, the tech, the plumbers, the electrician, those guys are just the new millionaires of it. And I guess it's a small sector of it. But as I've traveled the world, can I tell you what I realized? That AC is needed from Florida all the way to Europe, all the way to Africa, all the way to South America, all the way to Asia. Like electricians, like these things are huge. And if you can master it, it's amazing, right? And people don't realize that. And the reason why I'm bringing this up, because the way I see, guys, the world is almost reversing, with AI, with things like that. Like the basic needs of what we have here is reversing. So I'm bringing that idea up as an intro to our owner finance workshop here, is because it's not, we grew up in the modern world and society to believe that we need, for example, sorry, you real estate agents out there, that we need agents to buy a house. We need the banks to do this. We need banks to do that. And those are all institutional.
Some sort of third party. Yeah.
Yes, that's in it for them, right? It's either government based or either it's the market or corporation based to make us believe that, hey, you need Bitcoin, you need this, you need that, going back, the words, there is that technology, but it's also reversed, in my opinion, right? It's reversed back a little bit to, to nature, to natural, to farming, to just doing things that life is supposed to make us do in the first place, like nowadays, like we eat so much chemical food that we have to take pills to get bacteria back into our bellies, back to our body,
Crazy. Yeah,
right?
yeah.
So this is just think about that, right? So seller finance, owner financing has always been around, bartering, trading
Hmm.
has always been around in this universe, right? So now we'll almost get coming back to that. Does that make sense?
That's why I love it. Yeah, that's actually the same philosophy I have about it as well. It's like we're just so groomed to be like, oh, well, here's my, when the reality is, oh, it's my preferred lender and let me go ahead and get some little kickback. But yeah, it's like anytime I have an objection to why would anybody do this? Or why don't you just go get a loan? It's like, I'm super bankable. I have amazing credit. I have amazing income. But why would I give any extra money to a random third party when I can just give it to your seller? Don't you have your seller's best interest in mind? Like, isn't that your fiduciary duty?
Exactly.
And
Exactly.
that typically shuts them up each and every time, honestly. And then it opens up their mind quite a bit. And it's never like combative. It's always just like a very, we're on the same team. Let's get to the solution and figure that out.
That's amazing. That's amazing. But anyway, I want to get that. So was that a good intro?
Yeah. So
We're working. We're working. We'll fix
buyer
it.
to seller, no unnecessary third parties, not convoluting any of these
Yes.
buy and sell situations where they don't have to be, not making these transactions longer than they need to be, not, get it done, get an inspection, check it out, make sure your numbers work, and keep it moving, right? So, and it's legal everywhere, right? It's actually, again, I've been a big proponent of this forever, so over subject to deals. I own subject to deals and things like that, but this is much cleaner than subject to. You're going to have much more peace of mind. You're going to have, it's just, again, buyer to seller, no third party, no extra login, no unnecessary power of attorney or limited power of attorney, whatever. It's buyer to seller, automatic, no unnecessary. You don't need any servicing company. You can if you want, but it's just set up automatic wires or automatic Zells to whatever account your seller wants. That's what I'm doing right now. I'm closing on one next week. The same thing. Hey, what account you want your payment sent to? That's it. 2% deal, like 45% or 45-year amortization. It's an amazing deal. So it's just one of those things where and the way I like to see them as well is, I know a lot of people don't think this way. If you're going to buy one of these, you only ever pay for the entry fee. That's it. Kind of never pay for it again if you zoom out quite a bit, right? You think about it, you pay for your entry fee. If you accelerate depreciation, your entry fee is likely a rebate because you've accelerated that and got 7 years 7 years back of depreciation. So if you really think about it,
Can you repeat that again for the viewers?
Sure. So the way I like to think of entry fees on seller finance deals, because they're typically higher than your sub two deal. Most people want a 10% entry, and it's been very a blanketed thing where, oh, it's got to be 10%. Personally, I like turnkey deals that are most of the time renovated. So it's the down is likely going to be 10%, somewhere around there, and the rest of your entry will add to that. But the cash on cash will likely still be there. And if you accelerate, if you utilize every aspect of the deal that a sophisticated investor would, and I would think all of us should consider ourselves sophisticated investors, we're going to take that, accelerate the depreciation, and make sure we get as much of our entry fee back that we put down. Back meaning off of our tax liability. So I like to consider the entry fee a rebate. And the most of my exits that I do, I end up getting it back anyway because of the way I structure my lease options. So it ends up being almost 100% return on every deal anyway.
That's a great I
Well,
like that analogy.
so it's all reframing things, right? So I like to reframe it as, again, a rebate, because that's just tax benefit. And that's from holding. That's not including cash flow. That's not including appreciation, because you're going to put somebody in there who's going to pay for the house for you and continue to pay it. It could be, and even if that's a long-term tenant, everybody's doing or looking towards rather the pad split situation. So you never pay for it again, even with vacancies. If you consider the depreciation you may have accelerated, you're covered.
That's correct.
It's all just perspective, right? It's kind of like a mindset thing. You can choose to focus on a vacancy. Oh man, 1 month of vacancy, I lost $1,200. Did you? Or did you just choose to focus on the 1 month of vacancy and you're not looking at the big picture and you're focused on the wrong thing? You're probably up a good chunk of money.
Yes.
Mm-hmm.
That's a great angle to it, And is that so as you're saying that, is that awesome? You were saying that as the, what do you call it, as the buyer, but are you also saying that as to the seller? Or you're not this
Because
not
the seller is already, once they're
yes.
purchased, so this is post closing.
Yes.
The seller's just sitting back collecting money, not worried about the property at that point.
Yeah, that makes sense.
That's just from a buyer standpoint. And this is as somebody who was very previously only wholesaling these deals. Only wholesaling. So, oh, great. Yeah. $18,000, $22,000, $25,000 per deal. Easy. Because then they're great cash on cash returns.
Yeah.
Amazing. I was primarily wholesaling these deals for like a couple of years. And once I pivoted, I was like, man, why was I selling these? Why was I selling these? And again, you need to go through those things to understand why you should hold them, right? Because you realize like, oh, wait, I could have taken a $10,000 fee and kept the deal if I opened my mind up to private money. You know what I mean? And it's just like one of those things where it's like, oh, okay, well, now I know.
but that's why that's why these workshops are so important for people, right? Like there's so many angles, like everyone here, Ronnie, Anita, Christiane, myself, you, like we this is the stuff that it's another tool to our tool belt. It's another angle to say, okay, just start looking at things differently. And that's what I love about, this workshop that we're creating, is that it's like you say, it's not just wholesaling. It's like, how do you build wealth? How do you and what angles do we see it? And your approach to it, Josh, with the end game for both the seller and the buyer and us as the investor, I mean, that's fantastic, because that's giving you an angle to say, okay, if I wholesale this deal, just for example, the angle that you put there, right? Mm-hmm. For me especially, right? So if you wholesale a deal, I can make, 20K, possibly, maybe 10K. Or I could take this property and I could own or finance this property, and I can turn around and sell it to the next wrap buyer, or be the bank for the next buyer. But at the same time, when I do that, I can make 10,000, for selling, or for being owner finance, for owner financing it to the next buyer. But at the same time, that's also the tax benefits that I'm keeping, whether I take that to a lease option, whether I take that to owner financing. There's still, it can go on and on, guys. Like that's, I think on owner financing part 2 is that we are the bank, right? We are creating, we are becoming the bank. Like, how can you tell somebody that you can become your own bank? Is that possible? Going back to our intro that we talked about there, right? The bank tells you can become your own bank. No, the bank said, hold your money with me. I'll take that money and I'll finance that money out, and I'll make the percentage, and please and thank you. And I'll charge you a fee.
Yeah, exactly.
Just like, whoa, like that's what we were taught.
0.0001%.
Yes.
So yeah, it's interesting. And also, seller finance deals are much easier to wrap than a sub 2 deal. Much easier. And you're not going to be worried about any due on sale or anything like that.
Yes.
Like, at all.
Amazing. So, okay, so it's so we're doing this only for an hour, Josh. So let's get to our structure a little bit, so we can kind of move on a little bit faster. Guys, what do you guys think so far? Any feedback? We have a small group this morning, but what do you guys think so far, guys? Any feedback, any questions? Thank you, Ronnie.
Good information. Thank you, Pat and Josh.
Of course. I mean, next time we'll promote it a little bit more.
Yes.
I'm new to the industry. This really helps me. It really helps me when you explain the way you explain. It makes it, you really get to understand how the system works.
Yeah, that's great.
I'm doing LOI Blaster, and I'm doing all this, and I'm still trying to figure out, how is this working? How do I talk to the agents, right? And this makes me understand better how to go about and talk to them.
You
Yeah.
know, we're having to fight the status quo. We're having to fight the system, right? We're having to tell people that it's okay to go, and this is the reason why we're telling these stories. It's okay to go backwards to the olden days, right? It's to go back to say we can do this, we can trade goods, we can trade different things. It's okay, you know. And I'll say that from my story. I'm from a third world country. You know, I came here during the Vietnam War, and in my small Asian community as I was growing up, we did a lot of trade. You know, it was just like, back as a third world country, we trade things. You know, my mom used to work a factory job and she used to go out there and cut vegetables from the farmer, right? Where she would knock on doors and say, hey, can I cut your vegetables? She would pay the guy, $10 to get his vegetables, and then she would go out to the community and sell his vegetables or make something and sell. So we sell and trade things all day long, right? Right. So she made minimum wage, but we made a great living by selling and trading items all day long. Like we were back in the, in the motherland, the farmland. That's all we did. That's kind of how most communities do it. I know communities here in Georgia, right? Whether it's the Ethiopian community or whether it's communities here in Stone Mountains. This is what small communities do. We trade goods and services, to make a living. So it's not always all the time, necessarily buying something or paying something, but it's trades. So just, I don't know if that helps, but that's just kind of a story that I thought about owner financing, because it's like they have a product that we need to kind of, trade services.
Hmm. Yeah,
Well,
100%.
me as an agent, I really want to learn this stuff because I do get agents sending deals to me, especially if they can't sell them. Um, so I want to know how to present it. So that's why I'm here to learn and see how I can bring value instead of just the typical, even to sellers, instead of just saying, oh, I can list your house for this. And when you
Hmm.
know homes are sitting on the market, what else can I bring?
Exactly, exactly. Yeah, and that's what I realize a lot of these brokerages that want me to speak to their people are hoping to do is especially post August 17th, right? Is just utilize more tools, whether it's for their buyers or sellers or building their own wealth, because they can absolutely accelerate it with this.
We have stuff like click offers and things like that, but a lot of times it's not really beneficial to the seller. With the owner finance, unless the home is really overpriced, it's
Mhm.
possible to give the seller what they're looking for and be able to work out those terms, and instead of gouging them,
Almost
saying I'm bringing a cash offer, but really you're like wholesaling them.
almost every time I will make an it sometimes I'll make two offers. I'll make a cash offer and a seller finance offer and see, hey, whatever serves your seller best. You kind of plant your feet in a space where you're not against the seller. You're not trying to, or sometimes I'll be like, hey, yeah, you get those people, oh, are you an investor? Yeah, I am, but I'm not that investor that gives you a shitty cash offer and acts like I'm doing you a favor. That's pretty much what I say like every time when they ask me that, with a certain tonality that is implying that they're being defensive. Um, and then they open wide up, like, oh, okay, great, like blah blah blah, and then
And it's also, and then Leah, I see your hand raised. We're going to get to your question in a second there, but it's also solve. I think the key from what I've learned, guys, is how can you solve them a problem? Like solving their problem. Because I think what I love about the seller finance on the side of where Josh presents it is that it's you give them, let's just say, for example, from my angle of someone who does wholesaling, is the fact that you give them the exit strategies. You see what their problem is and you give them scenarios, right? Sometimes you can't give them too much, but you give them like three choices. You choice A, B, and C. Seller finance is part of that choice. But there's also choice of, they're subject to the choices. They're subject of cash offer deals. You give them the choice, but outside of that choice, I think what you guys have to think about is that, or we all have to think about, is the fact that what is their solution to their problem? What is the solution to the problem? How can we solve their problem? So does that make sense? Does that help a little bit there?
why would they do it?
Exactly. But your choices is, and I'll go back to from a funnel standpoint, guys, from a funnel and a marketing standpoint, it's like, when you go to McDonald's, right? McDonald's will give you the small fries, the medium fries, and the big fries. They really want you to go for the big fries. So the small fries is one price, the medium size is one price, but the medium fries and the large fries is only $1 difference. The small fries and the medium fries is probably $3 different. So what are you automatically going to choose? You're going to choose the medium fry, but then you're going to upgrade it to the large fry because it's $1 difference. So just keep that in mind. That's marketing, that's selling, that's sales funnel. So you tell them that, hey, you for $1 more, you get the large fries. And what do people choose? The large fries. Like all the time. So just kind of that's what we're here. We're here to present those three options. Leah, go ahead and ask your question if you want to come on.
Oh, yes. Thank you. Gentlemen, I don't know who you are. I just joined the call. Ronnie invited me. I'm an actual agent in Georgia. So this is interesting because I reached out to Ronnie. I know she's a part of a sub-2 community.
Ronnie knows everybody.
I'm sorry?
Ronnie knows everybody. I feel like there's always a lot of people that's, oh yeah, Ronnie told me to come in here. She knows everyone.
Well, she's a member of investment group here in Georgia, for a women's investment group. So that's how she and I connected. So long story short, I'm an agent here in Georgia. I am a member of the investment group here in Georgia, but I'm familiar with Subject 2, but I've never handled it as an agent. I do currently have a transaction that's right now getting ready to write the offer for Subject 2. And so I reached out to Ronnie to kind of get her advice, if I will, just to see what type of information I should make sure that's in place in the contract, because my brokerage has never dealt with Subject 2.
Okay.
So I always wanted to just kind of get that information from an investor who's handled it, or just somebody who I may know of who has handled it. So I reached out to her and she gave me this link to join on. So here I am. Getting ready to write a contract for Subject 2, but I wanted to let you know that as an agent, a listing agent in this case, because my seller was in a situation that wasn't necessarily distressed, but they want to move and the taxes had increased, and they said, I can pay the taxes, I just don't want to pay the increased taxes because that made my mortgage increase, right? So she said, I'm at that point, I'm just tired, I'd rather rent for a while. I can pay it if I want to. I just don't want to. So she's not desperate. She's just in a situation where she just wants to move on. And unfortunately, we were not able to sell her home, get it under contract. We had open houses and everything. It just didn't work. Offered closing costs, still didn't work. But long story short, here we are now. She has an offer from a investment company, offered Subject 2. And I just wanted to make sure that I had all the education I needed to properly educate her through the process.
Okay. Ronnie, are you still there? Ronnie? I think Ronnie's at work.
Yeah, no, yeah. I'm here. I must apologize, Leah. I know you sent a text on the Saturday when I was the whole day with Macarena and the team. So you were reaching out to Julie and Heather, and they didn't help?
No one responded yet. I did get a response from what's her name? Lord have mercy, I'm forgetting her name. Louisa. Sorry.
Because the reason why I brought you up, Ronnie, because I didn't want to overstep your toes, just for your respect.
No, I didn't connect with Leah yet. So you can go ahead.
But Leah, if you need help, we can communicate after this call.
Okay. Can I just say something to Leah? Hey, my name is Christiane. I don't know if we've met before, but your picture looks familiar. But do you need help with paperwork, or do you need help with talking to the seller about Sub-2 terms?
No. I already have that situation straight, I believe. What I wanted to make sure of is, like, for contract purposes, because we are using GAR forms, we're not using like a letter of intent or anything. So as agents and my broker, they require the GAR form. So I'm filling those out. So there's one particular exhibit in the contract that's usually a financial exhibit. So this does not fall under loan assumption, because none of the GAR forms have a Subject 2 exhibit. They have loan assumption. This is not a loan assumption. This is a Subject 2. So my question to my broker, because this will be a first transaction that anyone has done in the brokerage, is what exhibit should I be using? Or am I putting all the stuff, these terms, the financial terms, in this special STIPs?
That's what I was about.
What brokerage are you with?
Redfin.
Okay. We need to go to Redfin and give them a class, guys.
Yes.
Yeah, that's what I was thinking too.
Like,
Especially Redfin,
gosh,
very,
amazing.
very
Yes.
uneducated seller finance as well.
I mean, there's so many. Yeah. Okay, I'll let you guys do it. Yes.
Yeah, there's just a Redfin agent. She's been trying to sell this deal in Roswell for like a year and a half. I was like, your seller could have made a lot of money already. Like, what are you doing? But to your point, yeah, you can just honestly, I've done sub-2 deals on GAR forms. You can add it to special stips. Like Pat said, anybody can connect afterwards and help you out. But what you really want to make sure is fine is everything with the closing attorney. And I'd recommend Gerby Law handles that.
We already got them on it. They already got it. Already
Yeah,
talked to them.
so you're in good hands with that, but we can talk afterwards. But it's just, it's the best way I can explain to you guys is that, especially if you're using the GAR firm, like a contract is a contract, right? But exactly. when it comes to the special contract, whether it's a subject to or owner finance, what's very, very important is that what people don't understand, but here's my analogy, if it helps. It's a side bet. Okay, so you go to Vegas and you bet, right? You say, okay, this is the amount of money that I'm going to bet. But the side bet is more important, right? Is than the actual GAR farm. The GAR farm is the actual bet, but the side bet, the 5 other contracts that you're going to sign saying that what you're doing, whether it's subject to or owner finance, that's the most important part. So that part, if you have the right attorneys, you're going to get covered, because it's the what ifs that happens that you need to be covered on. And again, you are in good hands because that's the same attorneys we use, but I can go over more details with you, what you need to look out for and things like that. So after this call. So
okay, thank you.
Yes, thank you.
Thanks for connecting, Ronnie. Appreciate you including me for this call.
Anita, you had your hand raised?
Yeah, I did. When you were talking about going back to owner financing or seller financing, I just wanted to make a comment and, to say that a lot of the agents, even though they don't understand it, it's important that they do, because it actually opens up their buyer pool as well. We have a lot of people who can't qualify for traditional, bank loans, but it doesn't mean that they can't afford the houses that are out there. Lots of them have large sums of money to put down for a down payment, but because they can't qualify for a traditional bank loan, that kind of cuts them out of those, out of the pool for looking at houses that agents have listed.
Yeah, Pat summed it up perfectly. You're kind of going against the system.
Yeah.
Because it's an agent that's this is how things are done. And in 2020, 2021, they may have been doing really well with that. And mortgage brokers were doing really well and proving everybody 2%, whatever. And it's just kind of like now that's come to a halt and people don't know what to do.
It
purely education. Yeah.
And those rules and regulations they're set up to protect, the public. Yeah. But at the same time, in power, like anything, right? King, president, whatever it is, gives power. All these new policies and laws and rules, it almost protects them more than it protects, the public, right? It protects their bottom line in their pocket. So just, I don't know. And that's something to think about. But my partner is Christian Silvera. She's actually a loan officer. And I just want to explain something to you guys. 40%, if not more than 40%, 40% of all loan applications are denied. Okay. In America, over 40% of all loan applications are denied. People that can afford it, we help a lot of people that are, for myself, who is a small business owner first. I've been a small business owner for the past 20 years before I became a real estate investor. Immigrants, people who does side jobs, people who are undocumented. Guys, there's so many people that can afford a home, that can afford everything, right? People that are just, not as educated in financing, guys. People pay more rent than they do pay for a mortgage. People pay more rent than they do pay for a mortgage. So, my personal belief and now I think my new drive is to help educate and let people understand that we can get into homes. I wish the government would tell us, instead of saying, oh, I can get into this home, make it more affordable, make it more, not affordable, sorry, make it more accessible, make homes accessible for people again, because people need it. There's a shortage in homes, especially in Atlanta. And I feel like it's, like I'm Batman going out there fighting for people to get into homes.
Truly, it's because they just don't know. It's an education thing on both standpoints. And last sub-2 deal I bought that I sold on a lease option, it was super fulfilling. And I've never had that feeling really. And well, no, because that one didn't work out. But until that moment, this guy was so grateful and when it finally clicked that it was going to be his house and he was going to get into home ownership because he had plenty of cash. And it was like, you mean I can do whatever I want? Like I can do this to the walls and I can change this light fixture. Like I can do whatever I want. So yeah, it'll be yours. He almost cried, and that was like such a cool feeling just to be able to, wow, like it's so much bigger than making whatever amount of money we're able to make or on an assignment fee or some sort of deal or whatever. That moment there was really, really cool. And again, you're like, oh yeah, that's right. Like the banks couldn't do it, but we did. Like, like that feeling that is just, you kind of can't really compare it to anything. It's very fulfilling to be like, wow, like learning this stuff, applying this stuff really went full circle. And now you're able to help this family who was not part of your reason for even learning this at all. And you just changed somebody's life and maybe their trajectory of their life or whatever. It's really cool.
And to keep it simple, I'm going to try to go back to the structure part of it, Josh, is that, guys, when it comes to a contract, right? A contract is just an agreement between two parties. So when we're buying and selling anything, it's just a contract. It can be a napkin with a signature, with a date to say, I want to buy party A wants to buy, party B. Okay. So that's that part of it. Okay. Just to be clear. The other part of it is that when it comes to seller finance or owner financing, on the majority of it, it is the part of the financing side. That's the Chris, what would you call it? The promissory note, right? It's the promissory note on owner financing. And when we close these deals, we do go through an attorney. It goes through the legal system. Okay. I think the attorney is probably the most and only important part when it comes to doing deals, because it does get recorded. And when these deals go through, it does get recorded through the county. It does get recorded through the attorney. So everything from the legality of it is very legal, whether it is subject to or whether it is owner financing or anything from the creative financing world of real estate. It is normal. But it's how we structure it and how we do it is where people always gets afraid, right? So that's what is the number one thing that stops us. They're like, oh, well, let me ask my agent. Or, oh, is this legal? Or how am I going to get paid? Where am I protected? So can we get into the protection side of it, Josh? Talk a little bit more like the protection, because that's what everyone gets afraid, right? We talked about solving people's issues, solving people's problems. Solving people's problem, guys, is the most important thing. That's the one thing, if we can take away for today, is that how do we solve their problems? That is the most important thing. But after we solve their problems, how do we solve? It's not even problems. How do we resolve the mindset of their institutional thinking? It would be the other part of it.
Yeah. So to that last point, proof of concept, right? Everything is theoretical to somebody who hasn't done it yet. So Leah, for example, she knows it's possible, but it's still theoretical for her until she goes and closes that deal. When she closes it, which can close very quickly because some two deals can close very quickly. So she's now going to be like, oh, wow, that was so much easier than a traditional transaction because we didn't have to do this, that, whatever, right? So, and it's all going to be legal again. Like I think it's just proof of concept because people have decided that it's not the way that things can be done or should be done. And then once they do it, they're like, oh, damn, well, I was wrong that whole time. So let me go ahead and do that. And then they may tell the next person or their other agent or whoever else is at their brokerage or whatever. But to the legality and all the protection instruments, it's the same exact instruments. This is what I tell people because I get asked that question often. Well, how is my seller protected? It's like the same way Chase Bank is protected when they give a mortgage with the promissory note and a security deed. Those same exact documents are recorded at closing, and the collateral is the actual property itself. And that's how your seller is protected. The same way Chase Bank would be, or PNC or whoever, that's exactly how your seller is protected. And then they're like, whoa, really? Like they don't even know that that's the back end of a transaction. They just know, okay, I do my open houses. I show this place. If somebody buys it, bank lenders do their stuff. I have my preferred lender, and hopefully that's what gets approved. And they just like, all right, when's closing? They don't know the security instruments that are recorded and things like that, which again, not their job to, but it's only beneficial for them to know these things. And like Simone was saying, you can utilize these for your buyers and sellers however you want. It's going to open up your buyer pool way more. So they're protected with those. And honestly, if they've owned the property for less than a couple of years, which a lot of people surprisingly have, they will mitigate a lot of taxes, capital gains taxes, maybe inheritance tax sometimes. It depends. So it's, again, very situational, but being that all these are very situational, it means that there's different problems that you can solve on each and every transaction, right? So one of these I'm dealing with recently was an inherited deal. She's owned it for less than, she tried renting it, didn't like being a landlord. And she's like, I just want to be done with it. So whereas some person might say, well, I can rent it for this much, I always like to tell them, well, peace of mind is priceless. And if that doesn't give your seller peace of mind, because again, for me, that's just me personally. I like to be like, well, if that was me, I like sub-2 deals. I love sub-2 deals. They're great. I'd rather hold a seller finance deal just because peace of mind. There's not going to be due on sale. There's not going to be whatever.
That's correct.
I'm not going to give you random thing in the mail, or I don't even have to think about it. So for me personally, that peace of mind is priceless. Now, when I can say that same thing to a seller, like, why would they do that? They can rent it for this. Well, it sounds like your seller wants the peace of mind of not having to worry about a tenant.
And Josh, we got some hand raised, which we want to get to, but something too, guys, what I've learned too is that I'm going to say I in my terms, like I cannot put my mind and my situation into a person's situation, right? So going back to solving the problem standpoint, guys, there are people, especially now that we're getting more into, co-living, we're getting more into just affordable housing, guys. There's people that's in situations where they need help getting out of it, right? And in my first mind, I was like, am I taking advantage of somebody? And I kind of felt guilty just as, a good-hearted human being. But when I realized that I'm solving their issues and their problems and they're giving me hugs, that they're literally handing me their house and their mortgage for free, right? With literally $0, with a smile and a cry. Guys, it opened up my heart. And I was like, oh my gosh, I thought I was taking advantage of them. I thought I was feeling guilty about, these kind of deals that we do. But we're solving their challenging situation. Because some of them, like you say, and I just came up, Josh, because you're like, we get to people, they're in that situation, or somebody else has talked to, like they'd rather go and rent and they're happy. They'd rather move out and not have to have that burden of having to pay this big mortgage and this big bill, because everybody's situation is different, so.
Pat, can I add to that?
Yes, Ronnie.
So not only are you solving their situation, and then I got this from Pace, you're putting food on the table for the agent, you're putting food on the table for your contractors, you're putting food on the table for the wholesalers, the lenders, all of that. You're not only solving theirs, you're solving yours, you're solving a whole lot of people that you probably don't think about that you're actually helping.
Exactly.
So don't think that you're just taking advantage of anyone. You're helping so many other people that you're probably not even considering right now.
Yeah, think about how many people get paid in the transaction, all because you're the one who brought a solution to the table.
Exactly. Always think of it that way.
You brought a solution to the table, and now, like she said, that's a brilliant point. The closing attorney gets to
exactly.
They're working for their family because you brought a solution to the table, and when nobody else could, everyone eats off of that. That's a brilliant point.
Exactly. Simone. And then Anita was next. I think
Simone,
Anita, you still had a question?
Can you hear me?
Yes.
Okay. Yes. I think Josh kind of answered my question, but me coming into this new, I want to understand, because when I initially talked to an agent, I don't want to go so in depth because I'm new to it. I want to be able to bring the deals to you guys, and then I can learn as you explain it. But I want to have that initial conversation with confidence. So, for example, what is the difference between the sub-2 and the owner finance?
With the subject to, there is an existing mortgage in place. Seller finance, 100% owned, free and clear, no mortgage.
Awesome.
So let me
Next
elaborate on
question.
that too, because a lot of people think, somebody was talking about a GAR firm, right? The GAR firm is what the realtors use. So it's not an assumable mortgage. A subject to, you're not assuming the loan. We're taking the deed of the property and we're servicing the existing loan. Our name's not on it. We're just servicing the existing loan. So that's a big difference, okay? So it's not we're not assuming their loans. We're not getting into the institutional language of saying, hey, I'm officially going to allow Bank of America to say, can I take over this loan? We're not asking for permission. We're just continue servicing it, but we take the deed of the property and we own the property. So that's a big difference, just to have a clarity for everyone who doesn't understand the difference between assumable loans, what a subject to is, and what an owner financing is. On this particular Zoom, we're talking about the owner financing part, which is the fact that these people have already had, homes that are 100% paid off. Most of the time, not all the time, but most of the time, 100% pay off, and then we're helping them find a solution because, and especially in these times where they're not able to sell homes, they need to get out of their home for some situations. And going back to the problem solving, guys, it's like not everybody can go through the bank and get the approval of it. So we're allowing, and then we're also telling the homeowner, if they do sell these homes, they have to pay capital gain tax. They have to do certain things. Oh, they're not going to get the price that they want. We're helping solve the seller's issue and then also a buyer's issue.
Okay. So how on the buyer side, if I have a buyer that I know can afford, let's say, a $2,500 mortgage, but cannot get approved, and I bring them to this idea, how is the buyer protected? I know on the owner finance, I can get an understanding of that because it's owned outright. Yes. But on the sub-2, how would a buyer be protected on a sub-2 deal?
Because the buyer is going to have the deed of the property.
Okay.
So I think that's the best simplest way.
I think on that case, like I would be more worried about the seller because I've been on both sides. I had a condo that I did sub-2 to another lady that I know. But for me, as the seller, I would be more worried as the buyer. Do you see what I mean? Because I know me as a seller, I need to be prepared. If she doesn't perform, the property is going to come back to me. Which I'm all about that. Bring it back, no problem, right? But most sellers are not. But when you a buyer, that's where, like that's the way I see it. There's a little difference there. But I would not worry as far as being the buyer because it's just the nature. Josh, let me ask you something. So when you go present to the seller, seller finance, do you know already that he owned the property free and clear? Like do you look at PropStream and you know exactly what the loan is or no loan?
I only pursue 100% free and clear properties.
And then you get a list, and then
I'll look up wherever it is I'm
okay.
wanting to find a deal, and I only spend my active time. Any phone call I make is only on a property that's owned free and clear. Now, what I do and how I generate sub-2 leads from that is I will make sure I get that offer email sent out and be like, hey, this is a solution that I do. I prefer these type of deals, but if you have a seller, I prefer to do deals where the seller has all the equity and we can structure this type of deal, seller finance. But if you find yourself in a situation where your seller doesn't have a ton of equity, I also do those type of deals. And I have a whole bunch of agents that send me those where they don't have a solution, and I get them closed in about a week or two. So if you want to go ahead, if you find yourself in that situation, send it my way and I'll make sure you're taken care of. And that's it. So I plant the seed with them all the time, no matter what. But again, I don't, me personally, I personally don't love trying to pursue sub-2 deals because you have to sell them twice. You have to sell them on the solution, which is great. Everybody wants a solution, but then, and the mortgage stays in your name. I'd rather put together 2 seller finance deals in that amount of time than do that. But yeah, so let's we can go ahead and screen share, and usually that works. It generates a ton of leads, and then again, once you go ahead and do what you say, and the agent's like, oh yeah, well I sent this to Josh and it worked out well, and it closed. And no, then the next person is that agent may tell Simone, and Simone might be like, oh, cool. Well, what's his number? And literally, the last time I was speaking at Berkshire Hathaway, somebody texted me, hey, I have a seller finance situation. It might be subject to. My phone was sitting right next to the agent, and she saw it. And she's like, okay, this guy actually does do this stuff. So it's kind of proof of concept, and it spreads its own situation. So let's go ahead and screen share some stuff.
Yeah, we probably have about 15 minutes left. Just let you guys know there.
Okay. Here we go.
Guys, just as a feedback sample, what do you guys think so far? Let us know, because we are gathering this. This is kind of the intro to the workshop, but I just want to kind of get feedback a little bit from everyone. It is helpful, guys. Is there any things that you guys, I know we've asked a lot of questions, but we're going to get to kind of our screen a little bit here.
I think it's been very helpful. I think it's been helpful to have agents in here, because we also get to find out from them, what are their concerns? What are their hesitations? What is it about the processes that they don't understand, so that we have a better feel for how it needs to be explained or, addressed with them.
Yes, that is correct, Anita. It's just because it's just one of those things where we don't always, think about the different exit strategies or the options, right? Especially agents, especially agents. It's just like you go to a show and you want to, you definitely, and you guys that are agent definitely, let me know if you guys think otherwise. But you go in there and say, okay, I have a listing, I have a house that's for sale. I'm going to sell this house, and someone's going to come in. They're going to either pay cash or they're going to finance it. Those are the two options. That is not the only two options. There's so many options out there that the agents can't present. And it's just one of those things. And as an agent, you want to sell the property. So win-win for everybody. Going back to what we're saying, it's like you get you get your commission, you get paid, it's a win-win for everybody. The home gets sold, everyone's happy, but it's giving people those options. Josh, how's your screen sharing there? I think he got stuck by sharing his screen. All right, let's see here. Just give him a few moments, guys, as we're going through technical difficulties.
Yeah, sorry. I went to share my screen and it made me quit and reopen. Here we go.
Time for a new computer. Mine froze all the time.
It is too. That's what's crazy. You know what I think it is I recently updated the software for it. And there we go.
Okay.
Perfect. Finally. There we go. This is what we want to be sharing, correct, Pat?
Yes, that's correct. Yes.
Perfect.
We can just go through it quickly if you want to just kind of scan through it, and then we can just for time and purpose of it there.
Yeah, absolutely. So it's essentially going to be full-blown, really, really in-depth deep dive instead of like something that's so really kind of quickly glossing over. And we can really go top to bottom and with all of it and dived in. So I think what we essentially covered today was pretty much this so far. Intro to owner financing, what is it? I think everybody knows that now. Why would you use it? I think most people also know that. We know we're a little bit of the advantages for buyers and sellers and common situations. It's actually a lot more common than most people think. I think it's 40 to like 51% of homes are owned free and clear. So it's pretty interesting from that perspective.
And can I add something to that, Josh, just as a perspective for you guys? When it comes to I come from a small business background, buying and owning and running a small business, but also have bought and sold small business. When it comes to buying and selling business, guys, I would say 80% of it is all owner financing. Unless you have an agent involved, 80% of buying and selling businesses is owner financing because we cannot get into traditional banks for the most part. So just as something for you guys just to keep a different perspective of it. When it comes to big multifamilies, a lot of it is owner financing. Like
Yeah.
you don't go to the bank and say, I want, $20 million to buy this. You don't do that. You put down a lump sum, and for the most part, it's owner financing. So just kind of keep that in mind. So it's not only just with real estate and properties, it's with small business, multifamily, big business, et cetera, et cetera.
And that can be another selling point of it as well, or at least proof of concept. Because like, hey, like it may not be super prominent in single family yet, but they're doing it all over with businesses and multifamily, commercial, XY, whatever you can think of, cars, like anything. And then at that point, like, oh, so why would anybody be worried about selling a single family house if somebody's selling 50 units or whatever on seller finance? So we went over some of the legal stuff as well, owner financing, understanding the docs. I mean, we can do a real deep dive into these, which is actually not as confusing as most people might think. It's actually quite simple. And like Pat said, and a contract is a contract. It's really just an agreement between people. You could write that on a napkin and send it over to Gerby and they'll get it done. So it's really just making sure, but again, with the freedom to do what you want here, there's much more freedom with a seller finance deal than a subject to deal. You can add that whatever you want, like literally anything. You got to dress up like a clown and go dance for the seller every other Wednesday of the month or whatever, and you can put that in the promissory note, and that'll be part of your terms. So structuring, this is where it gets fun because everybody has preferred terms. I just spoke to, funny enough, Pat, a buyer of mine who has probably given me like $150,000 in the last like 18 months just from buying random deals for me. He wants to bring me in on to raise a fund for buying multifamily all over the country on seller finance. It's really interesting because he owns commercial, residential, businesses, all that stuff, and multifamily. So he wants to bring me in on that, which is fun.
Amazing.
Yeah, so he has specific terms. He kind of buys everything. He's probably very, very sophisticated where he actually, like, I think I resonate with him so well because he also looks at these from a bird's eye view, right? Very macro instead of the micro, focusing on cash flow or this and that. Granted, they all cash flow, but that he's very much big picture, full blown wealth building. Like, okay, yeah, this makes sense. Yeah, my tax benefits, all these things, and understands
And it's something to add too, guys, from when it comes to terms, it's not one size fits all. It's like if someone asked me, oh, how would you structure this? It's it's the same way as like when I do owner financing for our properties, whether we do fix and flips, like we acquire property and then we dispose the property, right? We sell it. We help get someone into a home. It's not about someone put in an application, oh, you're going to get approved. It is about that particular person, right? Like I always say, find the right buyer, then figure out the terms. Because you can get somebody that say, oh, I've got, and I'm exaggerating here. I've got, oh, I could pay for this. I could pay, 30,000 down. But the next guy can say, hey, I can pay 15,000 down. Well, that guy that has all this cash, it could be, and I'm exaggerating, it could be his drug money, and then he can't pay for the rest of it later. And he can't, there's nothing like, he doesn't have a W-2, he doesn't have anything. And then he's done. But he's the fastest guy to get to to front of the line to say, hey, I have all this cash. He may not be the right buyer for you. But then you have this other guy who has a small business and he can only put down $15,000, but his income, he can pay for this house that he can pay, at the rate that maybe you want or whoever wants it. So just keep that in mind. It's about getting the right buyer, not necessarily getting the right cash amount that comes in. And then from there, you can structure it however many ways you want, Get him a $10,000 down payment, have him pay the other 10,000 in 6 months, and you can structure it out.
Oh yeah, that's one of my favorite ways to exit deals because it's supplemental income for you, frankly, because you're like, okay, great, I get these extra chunks throughout the next 6 months, the next year, whatever, and you're giving them a great deal, and you have extra loyalty from them because of that. Wow, they were willing to work with me. A bank wouldn't do that. I can't imagine a bank doing that. Like, hey, you know what? Give me this much, break it up over payments, and yeah, sure, you owe me another 25, 30 grand, but just give it to me in 6 months. Wow, seriously? Like And then there's a loyalty there that is very, very difficult to kind of emulate if you're a big bank, because you just can't do that. So purchasing property, seller finance, we have about a handful of deal breakdowns that we can do, and we're likely going to deep dive into. Um, I can actually pull numbers from what real deals have actually netted cash flow for a year, deals that are over a year old from the buyer I just spoke to yesterday. Yeah, he's like netting like 5 grand a month on one pretty consistently. So yeah, it's a lot of fun. I think he's utilizing them as short term with his wife. So we can break down those from the all the way to the front of the acquisition side, to those phone calls, to the agent relationship, everything, all the way to what it looks like a year later. So those will be fun to do, and we can deep dive with that. Negotiating with them, I have calls with sellers and agents with agents who were sellers that I can likely going to compile and put together and really, really hone in. I suppose we can do like call breakdowns and see what is actually happening on the call. Why was I able to switch up somebody's attitude when they were really rude to me at first, or what let their guard down? So we can break down all of this.
That's the best part. That's going to be the best part.
Yeah, so this is going to be a whole lot of fun because breaking down those calls is interesting. And it's kind of one of those things where I remember a couple weeks ago that I was like, oh, that was my favorite. Zoom was like therapy for all of us. So me being on the phone, I don't notice when a lot of those things are happening, but other people who might be around when I'm having a call, they'll be like, oh my gosh, how did you do that? And I'm like, what do you mean? I don't even know it until I record them and kind of listen back. And so yeah, this is going to be a whole lot of fun, even though I hate the sound of my own voice. Let's see. Selling
Me
properties
too.
on
Me
finding.
too.
Exiting is also one of the funnest things, I think might be one of the funnest things for me in at this stage in my investing career is exiting the deals. It's a lot of fun. It can be stressful, right? Because like you need to figure out your exit strategy and things like that. But I think again, shifting your perspective, a perspective shift for everything is what I try to practice to make sure I'm gamifying it and making it fun. So marketing it with owner financing, a whole lot of fun. Setting up the deal, structuring it to maximize it.
And
It's
there's something else, guys. I think that, in terms of mindset, a lot of people think that, like you feel a lot better when when you have that paperwork and it has the GAR firm, let's just say, for example, and you feel a lot better when you have that paperwork and it has the Bank of America, right? Like sometimes you have to put that stamp into, and then when you're alone, you feel very afraid and you're like, okay, is this happening, right? I know Josh always talks about proof of concept. Well, for us, in terms of our Atlanta local community here, I like to see it as like we are that community, right? Like we are the stamp. We are the Bank of America stamp. We are the, whatever you want to call it, to let them understand that this happens. This is what we do. This is what people are doing. This is what's happening out there. Just to give that proof of mindset to let people know that, okay, I'm not the only one. If this is what people do every single day. This is what people do out there. It's just not what the institutionals are teaching or not the institutionals are advertising.
Yeah, it's not in their best interest to do so. It's in their best interest to keep making money for the banks. So yeah, it gets fun, but it's one of those things where, and we can probably close this up. As you can see, there's a whole lot of things that we're going to be covering here. Marketing your owner finds again, you don't have to keep these assigning these. Yeah, I think they're much better to assign these than a lot of cash deals because somebody doesn't have to come up with as much capital. Let's say you have a fixer upper for 300 with a 500 ARV. Yeah, it's a great deal, 4 months of work or whatever, but you can go ahead and for $400,000, that same investor might be able to cross-pollinate that capital across half a dozen deals.
And as another strategy too, and I know we're not going to get into it until we get into the course, guys, but let's talk about wealth building. Okay, wealth building. So for me and myself and my partners, we have, you not only sell, but you can acquire these properties, guys. You can build wealth by with zero to no cash and build wealth because you can take over these properties, help them get into a situation. From a wholesaling standpoint, we do what do you call it? We do assignments. You can acquire these properties and turn around and sell these properties. Be the bank with zero cash. Okay, just think about that, with zero cash, because all you're doing is being the agent, the middleman, however you want to call it, to acquire property, to turn around, be the bank of somebody else and sell that property. As a mindset, guys, just something for you guys to think about. Josh, you wanted to go over that quickly screen real quickly?
I mean, you said it, wealth building, and I was just like, oh yeah, I forgot I had this PDF pulled up as well. It's honestly just some deal breakdowns, things we'll get into in the future because I know we're already about to wrap up here. But yeah, these are full-blown deal breakdowns, actual deals. These are some that are all been a year. We'll see $22,000 assignment fee of a deal I wish I kept.
You're teasing us. You're teasing us.
Yeah, pretty much. So those are all full deal breakdowns, but I'm a nerd for this, if I'm being completely honest. I can yap about this for as long as you let me. So,
but guys, we're already over about 15 minutes, guys. How's this? And any questions before we let everyone go? Leah.
Yes, thank you. So when you said encouraging us to be the bank as agents, or if agents are on the call, whoever's on the call, to be the bank, are you referring to an agent who might have a potential listing, right? And they have that as an option to purchase that property through owner financing and then be able to sell it to someone who may not be able to?
Yeah, Leah, yes. To me,
Okay.
to my angle, yes, because to me, it's about helping everyone build wealth, right? But not necessarily. It depends on your situation. If you need to sell this and get your $10,000, $15,000 commission out, then that's completely fine. But everyone's in a different situation. But I think overall, like for us as our Atlanta investor community, it's just to help out everybody in their particular situation, because sometimes like I do, fix and flips, I do wholesaling, I do different things, and also private money lending and things like that too. But it's just a situation. Sometimes I need cash flow. If I need cash flow, then I need to sell that property. So if I need to do that, I wholesale the property. If I don't need it, I'll buy the property myself and just hold on to it. It just depends on what area I'm in my life at that time. So for you guys as agents, agents are very good at knowing how to get a listing and sell a listing, right? One, two things. And the same way you sell, you sell it, you get a cash offer, you get a finance offer. Guys, there's so many angles to that. But do agents really, what I think I really want to teach agents, I think, and Josh and I both, it's just, and my partners there, Christiane, is the same way. It's like we want to help people build wealth. Like, can agents understand to become an investor agent? Can they become wealth building agent besides just being an agent that does a transaction that buy and sell? You don't have to be that agent. You can be a lot more than that.
Yeah, I think that
it's just elevates your value.
I'm sorry, Josh. I was going to say, I think it speaks volume to the agents who are on this call, and even also being an agent that's involved in an investor group, to be able to educate ourselves to not only be investors, but also to better assist our clients. And like you said, create solving problem issues that we can just come in and just be that problem solver and come in and make it a win-win situation for everybody. So I think kudos to all the ladies on the call.
Yeah, truly. You'll realize in the next 6 to 18 months, taking these steps is what actually sets you guys apart in a big way. It's the compound effect's going to kick in and you guys will be out of here.
Yes,
because personally, this stuff, which is the best part too. Once you know that, like, even I've told Pat this before, like I will never buy. I do my best to not buy anything normally now. Anything. It's almost annoying. Whether it's a car or whatever, like I'll try to do everything
to go through the process.
Just because you can, yeah.
They're like, okay, we got everything. Send us more. And then before you close, I still need this statement. I need that statement. I need this. You're like, oh my gosh, are we ever going to close? Yes.
You guys are going to be great.
But as an investor, Leah, I just want to say, I'm more of a joke, but we hate agents. We hate real estate agents because they're at least majority of them, but we don't hate all agents. We call it unicorn agents. But agents make it very difficult for buying and selling process.
Well, it's what they don't understand. To be fair, agents aren't trained when they get their license, they're not trained to think like an investor, or they don't have these tools. Just like when you got your training, you never got a license. You got trained on these methods, right? Or if you do have a license, excuse me, but if you don't have a license, you didn't get trained on real estate. And so as agents, when we go through the school, we get our training, we get our license, we're taught one thing, we're tested on one thing. So obviously these potential tools, and they do talk about assumable loan and subject to, but it's just like, if I remember correctly in the book, it's like one paragraph about each topic. That's it. Right.
Yeah, because
So
you
just to
technically
be
have to
fair,
touch on it because it's
right.
legal in all 50 states, but
Exactly. Like you
like
don't get a
formality.
chance. Exactly. You don't hear about it or really learn about it until you actually get involved and talk to people who are investors or becoming investors. So just want to throw that out there.
Yeah, so thank
And
you.
it's actually sad because if agents were educated on this, because once you come out of real estate school and you sign up with a brokerage, you want to do deals. You're excited. You have all that energy. If this was trained as part of the training for new agents, I think there'll be a lot more agents staying in the business. There'll be a lot more solutions, solved. And I don't think we will have such a wide gap in people needing houses because there will be solutions.
Maybe. I think it just comes down to personality types, right? Like you guys are setting yourself apart by choice. We set ourselves apart by choice to go ahead and learn these things, implement these things, and bring these solutions, and decided to become more valuable. I tend to think most businesses are relatively the same because we're all human beings, right? You're going to come across annoying agents. You're going to come across annoying people at Starbucks. You're going to come across a rude waiter. Like it just people with a certain type of mindset exist. It happens. Adapt, be better. It absolutely can. We can bridge the gap and get everything done together. But yeah, like you said, you can have all the proof in the world. Like I have a hilarious call that I'll actually have to make sure that everybody listens to, where I had all the proof in the world, all the proof in the world. And this guy made up his mind where no, it was not a solution. And it was like, oh, okay, well, call this broker. You're with Keller Williams. Call so and so at East Cobb Keller Williams because he wants me to teach CE about this exact thing you're saying is bullshit. It doesn't matter. He made up his mind. So you know what I mean? It's just there's people like that, and it's okay. So
That,
even if
that's the
they
same as
did
people in
learn,
politics, right? It's the same.
yeah,
Like if they made up their mind, they're not going to be open about it. And we're like at the very beginning of the call, you cannot say the wrong things to the right person. You
hmm
cannot say it. If it's the right person and you're saying it, it is what it is.
yeah,
So if you saying the wrong things, even the right things to the wrong person, it's the wrong person.
doesn't matter. Yeah.
Yeah,
I love
exactly.
that so much. I need to put that on my blackboard. I have a bunch of things that I read every day up there. I'm gonna have to add that to it. But yeah, it's just so true. So ultimately, I think we can bridge the gap, but the deals will get done. It'll solve what it solves, and it's exciting. I'm grateful.
Well, guys, it's 11:20 now. We got to run.
Yeah, we do.
So, Leah, you have I put my number on there. If you would just shoot me a text, I gotta
Okay.
hop on another Zoom.
Okay.
And then Josh, I'll talk to you in a few minutes here.
Okay, sounds good.
Guys, thank you so
Thank you,
much.
guys.
Thank
Bye,
you.
everyone.
Guys, have a
Bye-bye.
great day. Thank you.
Bye. You too.
Thank you.
So, bye.
Thank you.